Ever wondered how much is in mutual funds? Well, let's break it down. Mutual funds are a type of financial vehicle made up of a pool of money collected from many investors. These funds are then used to buy a wide variety of securities, stocks, bonds, and other assets. The goal? To generate income or growth for the investors. Think of it as a basket filled with different types of investments, all managed by professionals who make the tough decisions for you. Now, imagine not putting all your eggs in one basket. That's diversification. With mutual funds, your investments are spread across different types of securities, reducing the risk of a significant loss. It's like casting a wide net in a sea of potential gains. Intrigued? We're just getting started. Stay tuned to know the 7 benefits of investing in mutual funds. Firstly, mutual funds offer diversification. Now, you might be wondering, what's diversification? Think of it like this. Instead of putting all your hard-earned money into a single stock or bond, you spread it across multiple securities. This way, you're not risking everything on one horse. If one security underperforms, the others can help absorb the blow, reducing the overall risk to your investment. Imagine you're at a buffet. You wouldn't just load up your plate with one type of food, right? You'd sample a bit of everything. That's what diversification in mutual funds is like. You get a taste of a wide range of securities, from stocks and bonds to money market instruments. And the best part, you don't need to be a Wall Street whiz to do this. Mutual funds are managed by professionals who make these decisions for you. So, with mutual funds, you can spread your eggs across multiple baskets. Secondly, mutual funds are managed by professionals. Now, that's a phrase that carries more weight than you might initially realize. Imagine you're navigating a ship in uncharted waters. Wouldn't you feel more secure with an experienced captain at the helm? Of course you would. That's exactly the kind of confidence and security professional fund managers bring to the table. These aren't just any professionals. They're skilled, experienced, and have a deep understanding of the financial markets. They devote their time and expertise to analyze market trends, evaluate performance, and make informed decisions. They're constantly on top of the financial game, studying companies, economies, and even geopolitical events that could affect your investment. They use this knowledge to build and manage a portfolio that aligns with the fund's objectives and your financial goals. They're like your personal financial captains, steering your investments through the choppy waters of the market. This means you're leveraging the expertise of seasoned professionals, so you can sit back, relax, and watch your investments grow. Thirdly, mutual funds offer high liquidity. Now, what does that mean? In the simplest terms, liquidity is the ease with which an asset or security can be converted into ready cash without affecting its market price. Too much financial jargon? Let's break it down. Imagine you're in a situation where you need cash immediately. If you've invested in assets like real estate, it might take weeks or even months to sell and get your money. But with mutual funds, that's not the case. Mutual funds can be bought or sold on any business day, providing high liquidity to the investors. So, if an unexpected need arises, you can sell your mutual fund units on any business day and get the cash quickly. It's almost like having money in the bank that can be withdrawn at any moment. This flexibility and accessibility is what makes mutual funds a highly liquid investment. This makes your investment readily available for any financial needs. Fourthly, mutual funds are affordable. You see, one of the great things about mutual funds is that they allow you to dip your toes into the investment world without requiring you to break the bank. It's not about having vast sums of money at your disposal. Rather, it's about starting small and growing from there. You can start investing in mutual funds with a relatively small amount of money, making it an accessible avenue for many. This is possible because mutual funds pool together money from numerous investors, allowing you to benefit from economies of scale. This means that even with a modest sum, you can gain exposure to a diversified portfolio of investments. So you don't need to be a millionaire to start investing in mutual funds. The affordability of mutual funds is a significant advantage, especially for those who are new to investing or have a limited budget. This makes it a feasible investment option for all. Fifthly, mutual funds offer flexibility. Flexibility, you ask? Yes, indeed. Mutual funds are not a one-size-fits-all kind of investment. They cater to the unique needs and preferences of each investor. And how do they do this? By offering a variety of plans. These include systematic investment plans, systematic withdrawal plans, and dividend reinvestment plans, to name a few. Systematic investment plans, for instance, allow you to invest a certain amount periodically, whether monthly, quarterly, or annually. This is perfect for those who want to invest but are wary of market volatility. On the other hand, systematic withdrawal plans provide you with a regular income by allowing you to withdraw a fixed amount periodically. And if you're looking to reinvest your gains, dividend reinvestment plans are your best bet. These options provide investors with the freedom to manage their investments as per their financial goals and risk appetite. This makes mutual funds a flexible investment option. Sixthly, mutual funds offer a wide variety. Now let's talk about variety. And no, we're not referring to the spice of life, but rather the spice of your investment portfolio. Mutual funds come in all shapes and sizes, making them a highly versatile investment tool. Just as a well-stocked pantry has something to cater to every taste bud, the mutual fund universe provides a plethora of schemes to suit different risk profiles. Are you a risk taker, eager to ride the highs and lows of the market? Or perhaps you prefer a slow and steady approach, favoring long-term stability over short-term gains. Maybe you're somewhere in between. Regardless, there's a mutual fund scheme for you. From equity funds, which invest in company stocks, to debt funds, focusing on bonds and other fixed income instruments, and balanced funds providing a mix of both, the options are as diverse as they are plentiful. This allows you to choose a plan that best suits your risk appetite. Lastly, mutual funds are well regulated. Now you might be wondering, what does that mean? Well, let me enlighten you. Mutual funds operate in a tightly controlled environment. They are subject to numerous government and industry regulations that are designed to safeguard investors' interests. These regulations are enforced by reputed bodies such as the Securities and Exchange Commission in the United States. They oversee everything from how the fund is structured and operated to how it's marketed and sold. They ensure that the fund managers are qualified and act in the best interest of the investors. There are also rules that require mutual funds to disclose important information, like their investment objectives, risks, performance, and costs. This transparency allows investors to make informed decisions. Moreover, to keep things fair and square, mutual funds must calculate their net asset value, or NAV, at least once every business day. This ensures the transparency and fairness of mutual funds. So, why should you consider investing in mutual funds? By now, we've delved into the depths of mutual funds. They're not as daunting as they might initially seem, are they? In fact, they're a pretty nifty tool for growing your wealth. Let's do a quick recap of what we've discovered. Firstly, mutual funds offer diversification. Remember, this is a way of spreading your investments across different assets to reduce risk. It's like not putting all your eggs in one basket. With mutual funds, your money is distributed among a variety of stocks or bonds, mitigating the potential impact of a single asset's poor performance. Then, there's the advantage of professional management. Your investments are handled by experts who eat, sleep, and breathe market trends. They constantly monitor performance and make informed decisions on your behalf. It's like having a personal finance guru without the guru price tag. Let's not forget about liquidity. Mutual funds are easy to buy and sell. Need to cash out? You can usually do so on any business day. It's like having a money tap that you can turn on and off when you need it. Affordability is another key benefit. You don't need to be a millionaire to invest in mutual funds. Many funds have low minimum investment requirements, making them accessible to almost anyone. Flexibility is also a big plus. Mutual funds allow you to invest according to your financial goals and risk tolerance. Looking for aggressive growth or steady income? There's a fund for that. Variety is the spice of life, and mutual funds offer plenty of it. There are funds that invest in specific industries, regions, or types of companies. The choices are nearly endless. Lastly, but certainly not least, mutual funds are regulated. This means they are subject to a strict set of rules designed to protect investors. It's like having a financial safety net. Remember, mutual funds offer a unique blend of benefits to help grow your wealth. So, are you ready to take the leap and start investing? We invite you to watch our next video as we unravel power of investing.